one should tend to optimize these opportunity, and without fear one should build. Because India in a very decisive bull run, something has changed for India. I've been very vocal about for last 3 years, saying that this decade belongs to India, maybe half century belongs to India, and irrespective of any government. Okay, largest reforms or the reforms which we have seen, I don't think they can reverse overnight. And the current government may not mean exact majority, but in the coalition government they are coming back. And coalition does not mean that something will change. And I think we have seen the first UPA coalition was also very effective and market rallied once their formation happened. So I don't think the stigma that people have with the coalition government, that this will not work, freedom will not be there. What is very important when this event happened, people were not prepared for that. Okay, we have preconceived notions about certain things. This is the way it will be, and that's the way exit poll also indicated. And all everybody was sucked in with that thought process. If anything get changed or will get changed, I think it takes time to rebalance or readjust your mind. Also, I think we are in that phase right now, where some people are quick to readjust, some people take time. So I think market has a tendency to overreact, because this was the situation they were not mentally prepared. Market has overreacted on Monday also another way, and Tuesday it was other way completely. So I think if we have a rational thinking and just remove the narratives which is there in the media, or narrative which people are talking about, if I can remove those things and look at from very pragmatic approach, realistic perspective, I think India macro remains very good. And if you look at from India, I generally talk about perception analytics and how India perception is one of the best in the world, both in absolute and relative basis. In fact, on a relative basis, is quite extraordinary. So I think it's a lifetime opportunity where one should not move out from the equities market in India. Some very rare phenomena you get, we are in that phase of life. And hence, we all advise everybody to remain invested. If you want to do sector rotation, stock rotation, or do thematic shifting from one fund of mid and small to flexi, or mid and small to large, but one should remain invested. That is what is more important for us to understand, rather than getting panic the way we saw this thing yesterday.
Sandeep, just one more quick point before Sakshi comes in. And since yesterday, a whole lot of market masters like you have been on the channel, and one common theme, the shift towards defensive, and sort of rebalancing the portfolio, and this has perhaps also been triggered by certain brokerages, for example, recommending that move over to IT instead of capex, and we saw how the Nifty IT index was. Is that a rational thing to do at this point of time?
See, I tell you, majority of the people tend to react with the price movements. Okay, whether it's money managers, whether it's media houses, or whether it's the analysts, or even the masses, the conviction comes with price movement. Okay, uh, since today morning, the consumption stock have rallied, so everybody is talking about switching from this to that. Okay, the fact remains that if you look at as a Quant mutual fund house, we were very early in January. We spotted that trend of consumption coming back, ruler cycle coming back, and we launched a consumption fund. And we have talked about the rural economy, which was slightly distressed because of inflation, or what do you call it, supply constrained inflation, which was the case right now. And we have talked about, if I look at the high frequency data, it's giving me early signs that something has changed in rural economy, and it will change further in a more constructive. That's the reason in last 4 5 months we have built very large consumption name in our portfolio, and food companies in particular. Okay. So I'm quite convinced it's opportunity, because most of these consumption names, particularly FMCG names, they were actually hit the neglected zone. So from a most admired territory few years back, they were in the neglected zone for a while, and best of the money managers who were holding these names for a long period of time were getting capitulated. So we look for such opportunities, which was there a few months back. I'm not saying that today they have peaked out. Yes, it's market because price has lied, so that's the reason it is more visible right now. This theme will has potential to gather momentum, but I'm also bullish on the broader market also in general. It's not like this consumption name because they have rallied, but I think there's a lot of value in the some of the other sectors also. I don't get too much disturbed about the capitulative move which we have seen yesterday or today morning. I think it is a great buying opportunity. If you believe India thesis that India will emerge as a separate asset class, India is in a unique situation. Suddenly, the price fall has shaken that confidence.
Yes.
So our perspective, the data points have not changed at all in last one day, and hence we remain constructive, and India remains a perfect buy on dip strategy.
A perfect buy on dip strategy. That's a great way to put it, Sandeep sir. The other point is for our wider audience, let me highlight we are back above 22,550 on the Nifty, and all the sectors are in the green. Apart from FMCG, IT, pharma, some of them that Siddharth has also highlighted. Now even metals, financial services, they are also
crossing 5%.
5% higher. The kind of move that we are getting here. Do you think this is now whatever was supposed to be done yesterday is now done? Are we on course to recover all of that loss that we had yesterday? And how soon before we get there again on that 23,000? Or am I getting too optimistic?
First of all, one has to understand, the sector or stock which has fallen in last 2 days, if we are saying that that has been settled and everything, the 820%, 20% which we've seen in some of the names, maybe may have recovered, but I don't think they are going to recover in a hurry. We have to always keep in mind, uh, whenever we as a house talk about the concept of money flow analytics, how money shift from one asset class to another, which we are able to quantify. Our entire risk management thesis revolves around this movement, money flow analytics, where based on the prevailing condition, whether what level of risk, what level of risk appetite, or what would be the intensity of risk appetite, if we can quantify that, it helps us in doing stock rotation and sector rotation. So stock rotation and sector rotations are part of this journey for a while. Okay, but what we happen typically in a news event happens and then people realize, oh, this was the need. So sometimes it becomes like a self-fulfilling process. Okay, it was due for that and some event happened which triggered. Now in today's context, everybody has very good thought process of justifying everything in life. Whatever happened, there's a justification, whether up or down. Justification is there. What I call it narrative. So narratives are created or bought and sold also in the market. So I think that is what we differ from others. We try to say, look at the narrative versus reality. Try to differentiate the narrative versus reality. Maybe down the line, let's say today, you could have realized, oh, yesterday the noise level was too high. Actually, it was a buying opportunity, but now you're late by 24 hours. Okay, and some of stocks are rallied. So I think what is very important when we build our own analytic framework, these data points are built when the environment is very normal. People like us build it. Okay, but it's very effective, useful when there is a chaos on the street. When you are emotionally disturbed, those are the time when you realize that something has changed and what my data points are endorsing. Based on the data analytics, I'm willing to take a call and just ignore the noise which is surrounding you.
Okay. The other fact I wanted to understand from your own funds, Sandeep, we were discussing your Quant large cap fund in another show in the morning today. This was a large part of an advisory that we were giving to all our viewers that the best way to participate is through mutual funds. And there were three diversified funds that we took. Yours was one large cap. We also discussed Kotak Emerging Equity Fund and Invesco Small Cap as well as a large diversification for the viewers. But on Quant large cap fund is something that I wanted to discuss with you. A lot
Yeah.
of this narrative is now building up that large caps which have largely not performed is probably going to be coming back into flavor. Risk reward is much better. So this is the area that could probably now in the next few years make more money. So within this large cap fund, I'll just give a little highlights to all our viewers. There's an NAV of just 14.9 rupees at an AUM of 997 odd crore rupees, and you had launched this fund in 2022 on August 8. There is a CAGR return that we have seen on this fund of 24.5%. There are a total of 21 stocks, and the top 10 holdings or the top 10 stocks have the 63% of the AUM deployed towards these, and the top holdings remain Tata Power, Reliance, Geo Financial, Hindalco and LIC. Could you now detail for us if there are any changes that you would be looking at after this political development has happened, looking at how scenarios are changing? Would you look to add to some more stocks in this fund right now, and any sectoral themes that you would make the changes through?
See, to be candid with you, we have already made changes in last many months or so, and even last month also we have seen HDFC has been added in IAPs. And we have built today. If you look at, if I'm not wrong, 25 or 27% of exposure is there toward the consumption names. More than further to 20% mark will be the FMCG itself. So it's a skew towards consumption right now, skew towards energy, and skew towards financials also. So I don't think that we have made any radical changes in last day. Okay, because we did have some cash inflows which we have deployed today also, yesterday also. But if you really notice right from January what changes we have made in our portfolio, it's very interesting that we were gradually moving from illiquid to liquid names, from high beta to low beta. This is some of the changes which we're trying to make, keeping in mind this election as an event, which is an important event. We don't ignore it, but it's not as critical as the way market was perceiving. Is a part of our life. As a macro student, we see every second month some election or other thing is there in the world. This year is a very coincident. We have 45 election this year happening in the world. What is important to understand is that it's the risk management part we manage. In last many months, those things have been addressed quite well, and hence I don't think in just one day I need to review the entire thing.
Sandeep, while I completely agree with you, and I'm glad you are a very sound voice of reason in our markets, but given what is happening on the political front, and for the record, Modi 3.0 swearing in, as per sources, news reports, is on this Saturday. Two of the key allies have flown into Delhi, meetings will happen, so we will see the political dust settle. But given the very basic fact that the BJP on itself is short of a majority, will political instability be a factor beyond the macro metrics which you said haven't changed materially, the fundamentals remain strong? Will political instability have to be factored in every market move over the next several months?
See, uh, theoretically speaking, obviously one can say that if you are not in with 2/3, you are dependent on your partner. But just to conclude that the coalition parties or coalition government has not been very effective, I think that is also will be a premature statement and maybe a myth. Even 2020, 2004, if you recollect, the UPA one did a good job and the market has rallied in that period. So I don't come with any mindset that coalition doesn't work. And yes, I agree, freedom reduces, but sometimes it also gives you a balanced approach, also maybe more constructive, more discussion. So some radical decisions can also be removed, okay, with sometime when you are in full control. So I think market is actually taking a very positive manner rather than a very skewed decision making process, which was the case in the past. And market started believing it will be much more balanced approach. So who knows that this tenure turn out to be even more effective than the Modi 1 or Modi 2 version. Okay, so I think I don't go with any hypothesis that this will not work. I think the way we look at some of the changes with the current government or now past government has done in last 10 years, I think completely irreversible. They are great moves, okay, which has
But a
taken
change,
India to the
Sandeep, sorry to interrupt you, but a change from being so much invested on infrastructure and a massive capex plan to perhaps 30-40% more allocations for programs and policies that drive consumption. Is that a likelihood?
So I think I was talking on other channel also. If you really look at the allies, like TDP is the second biggest allies in there in the NDA. I think Mr. Naidu himself is a very forward-looking person, who has spent a lot of money in telecom and IT in his own state. So I don't think this current or what is the proposed NDA government which come will be completely regressive and they will change their own stand what they have done. It looks very unlikely. As I said, some decision which they could have done in a very aggressive manner maybe get pushed back and maybe get deferred, because you have to take now allies also. Their views has to be respected, consensus has to be rebuilt. So the approach can change and some decision can be deferred. But if you ask me, the trajectory is absolutely correct. I don't think the trajectory can change. As far as debate is on the consumption versus infra, I think, see, if infra gross build gets built, I think consumption is the byproduct of that. It's not like when roads got built, people are not beneficiary. They're huge beneficiaries when the road got
Absolutely.
built. Okay. Today, the government is focusing a lot on railway also, where we have put in a lot of money in our portfolio. We are still not
Yes.
sold because we think that is a great opportunity for next few decades. What the government is building, I think, is step in right direction, and work is already going on. So I don't think anybody can reverse it. The only thing is that there might be some expenditure can happen on the rural economy, but I think, frankly speaking, it is needed because rural economy is affected post-COVID. What we call it, demand constrained inflation, which came out, not demand constrained, supply constrained inflation, which we have seen, has affected the livelihood of many people. And if some relief can be given, I don't think I will look at a social service sort of thing and it's too populist measure. I think government has to balance it, and market do understand. We are looking at right balancing act, because too much skewness only on infra. Look at what happened in China when they have just built infra. There those some of the cities are deserted cities. So I don't think that's the way we should look at, as a government has to balance both.
Absolutely.
So I'm not too much worried about the way narrative is right now, because it's coming from a fear. I look at everything from a behavior perspective. This sort of environment, you are not prepared, and hence if you're not prepared and it happens, then you start showcasing your concern. Arey, this can happen. Arey, that can happen. Okay, but historically it has not proven this will happen, and I don't think, if you really look at allies and even the government, everybody has made statement, even from the bureaucracy is talking about everything will continue. I think we have to believe that part, and I also believe that something is working so well. I don't think anything will reverse completely. Maybe some decision making some key decision or some reform which market was looking at, let's say judiciary reform, electoral reform, or maybe land reform, or maybe labor reform. Maybe they can get deferred for and they need more time to build consensus. Otherwise, they could have done on their own. Maybe those things, but that doesn't affect your current reform, which is there. Does not mean that will reverse completely. So I think I'm very confident that one should remain investment is a noise which will settle down in next few days' time.
Okay. So, Sandeep sir, just tell us this. How about the concern on the valuation front in some of these runaway sectors? You talked about railways, for instance. There has been a thought process that probably these have run up, even if it is a multi-year story. Probably for now, the rally is done and dusted. Again, in the dips yesterday and also today continuing, how would you advise somebody to really look at railway story, for example, if somebody has a long-term view? Similarly, for defense, for that matter, the power space, for that matter, which has been a big performing theme. Again, these are all pockets where money is flowing out of from, at least in today's trading session, of course, continuing from yesterday. How are you looking at this space, sir?
Okay, so interesting point. See, first of all, we always talk about, when we bring our VLRT framework or predictive analytic thesis, we always say is, don't look at just valuation analytic in isolation. You will not get the perfect answer which you want. Okay? And that is the biggest challenge of valuation analytics when when you start looking in isolation. When you do multi-dimensional research, and apart from valuation analytics, when you bring the second dimension, let's say liquidity analytics, then you get some different perspective. When you get the, let's say, third dimension on the sentiment, then you get more answers. So if you really look at, let's talk about for a few minutes on the defense side, and you talk about railway defense. Let's say, uh, first of all, as a caveat, we'll always say that we generally don't talk about stocks. But as a house, we have been very vocal about value as a thesis. We say it's a decadal opportunity. We have also talked about something similar for metals and PSU, again, decadal opportunity. Something has changed, and has changed for good from long-term perspective. Now let's just academic exercise. When you look at, since you raised point of defense, okay, and railways. So let's understand, valuations of railway and defense both are expensive. Answer is yes, they are expensive because market has factored maybe next few years growth. And maybe in defensive, it is even more expensive because I think the market has factored next 5 years growth if you are factoring 2 or 3 growths in railway. That's the way I look at. But when you bring the second dimension, liquidity, okay, at least the liquidity and the behavioral data point, the sentiment data points is showcasing that defense has reached the most admired territory, which I look at. That does not mean they have stock has peaked out and the sector and will not perform. But the sector which is the biggest market outperformer, I think that outperformance cycle has peaked out. That's the way I will define it. So as a house, when we realize that outperformance cycle is peaking out because we work through perception analytics, we're able to foresee the valuation multiple. I think that's where we have discomfort. But if you look at and if you really also understand from the defense point of view, defense is really fairly discovered stock, multiple houses covered, is fairly distributed stock. I will say right now, slightly overweight. Okay, so where railways are not in that situation, they have yet to reach that admired territory. They are definitely not in the neglected. They're in somewhere in between. None of the houses get the railway stocks are get covered. Okay, grossly under-owned sector. So I'm just looking at opportunity. What we did, we pruned and sold out defense and increased the railway exposure. That's what we do based on the analytics, and not to bring our personal bias into picture.
Right. Sandeep, as we were speaking, some developments that are routine in such situations. The current government has resigned and met the president. The president has accepted the resignation and requested Narendra Modi and his council of ministers to continue till the new government assumes office. Saturday is said to be the date of swearing in. We are still waiting for the official announcement in that regard. Meanwhile, outgoing Chief Minister Mr. Patnaik in Odisha has tendered his resignation. There will be a new government there. In Andhra Pradesh as well, where viewers, the latest news doing the rounds is that land prices in Amravati have shot up within a matter of hours after the verdict. So if the stock market was falling yesterday and Sandeep told you what you should have done, if you at all invest in real estate, Amravati is where real estate prices are on fire. But that's a subject for another conversation with someone else. But for now, Sandeep Tandon, thank you very much for your patience and your time with us today. Sakshi, we'll slip into a quick break, and just in a few minutes from now, viewers, we will close today's trade. Sakshi and Shell with you in just a bit from now. Stay tuned in.
The stars are shining for the stars as celebrities bag back-to-back wins in the 24th Lok Sabha election. Bollywood actor and BJP candidate Kangana Ranaut trumped Congress's Vikramaditya Singh